Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague here.
Hello there, I'm Yatin Mota.
Well, I think it was a very, we all fall down kind of a day, sea of red across the screen, and, even the broader end of the markets has succumbed today. So both the mid and small cap indices, which, by the way, have been outperforming benchmark
Yeah.
indices in the last few weeks today, they've also succumbed. Although yesterday also we saw the headline index shed 100 points, but the broader end of the markets managed to hold on. So it wasn't really appearing to be such a big deal. But today, on the headline index, we have tumbled over 300 points. In fact, we did come very close to the 20 DMA level today. Although we've ended above that level, but just about so. So 24,350, we have ended below that level. Sensex as well, 1,000 point cut coming in. And if you look at the Nifty Bank Index, that's also shed somewhere around 750 points or 1.5% almost. So 52,830 is where the Nifty Bank Index is at. All these sectors were under pressure today. And if you look at the Nifty 50, barring Cipla, that was the only man standing today. Uh, all the other stocks were in the red, deep in the red, so to say. If you look at some of the movers, then Shriram Finance, Grasim, Bharti, Airtel, which has been under a fair bit of pressure in recent times, that continued to be among the top laggards. Hero Motocorp, JSW, Steel, these were some of the other counters that were under pressure. So were the likes of Aisha Motors, TCS, Asian Paints, Coal India, L&T, Reliance, all of them. But only Cipla managed to hold out on the back of an upgrade on the upgrade from brokerage. So that stock was also just about it just managed to end the day in the positive zone, very flat. But that was the only green that I could see on the screen today. Yatin, although broader end of the markets ended the day in the red, there were quite a few winners as well in trade in terms of stock movement.
Yeah. So I think in general, if you look at the markets, we had a mixed trading session. In fact,
Hmm.
in the morning, despite the markets being down, we had the advance decline ratio, which was almost 1:1. But clearly, in the second half, we failed to recover. In fact, the 200-point downtick on the markets converged into a 350-point fall, which probably did not augur well for the mid caps also. And that is the reason why the advance decline ratio also at the end of the day was almost 1:3. So one gaining stock to three declining, and most of the sectoral indices traded with losses. Stocks like Jyoti, CNC, Quest Corp, Mazgaon Dock, Five Star Finance continue to rally. In fact, this is the second day wherein Five Star Finance, that stock has moved another 5%. What was not doing well is stocks like Blue Star, Jyoti Laboratories, as well as HFCL. And HFCL, ever since it has come in the future and options space, that stock continues to slide. In fact, today the stock is trading close to 120 levels, was at around 135, 140 levels when it entered the FNO space. Stock like Mazgaon Dock also continued to rally. Paytm also at one point in time rallied 3-4%, ended the day higher by nearly 1%. But real estate stocks, stocks like Oberoi Realty, Anant Raj, were doing well. The financial services stocks Paytm, like 361 continue to rally. CDSL, Naukri, and Dixon Technologies were the other stocks which continue to hit fresh 52-week highs.
All right, providing some bit of strength and some bit of green to the screen. Those were some of the winners in a weak market. But on that note, let me also bring on board our guest for today. Joining me is Nilesh Jain of Centrum Broking. Nilesh, how would you look at today's fall? In recent times, in fact, in Friday's session, we made a swing low of 24,180 on the Nifty. Today, 20 DMA level of somewhere around 24,314. That we came very close to that level. Going by today's movement, would you say that levels of 180 could also be tested, which is the recent swing low?
Very good afternoon to Nandita. Good afternoon, everyone. So yes, we did see a pullback 2 days back from the levels of 21 DMA, which is currently placed at 24,270 levels. And it looks like today we have witnessed a build-up on the short side. So not a good sign for the market. Overall structure is looking more sort of a sideways to weak. And any pullback might get sold into, since Nifty is unable to break its crucial resistance of 24,700, 24,800 zone. So that is acting as a steady wall. On the lower side, we have multiple support. Immediate support for the Nifty, which is placed at 24,000 to 24,270 followed by 24,000. So these are the two important levels to watch out for. It looks like we might see another leg on the lower side going forward, and I won't be surprised if we see any rebound towards the closing of this year, that is December series expiry. So in that particular week we might see some rebound, but as of now the immediate trend looks weak. The wicks have witnessed a spike today, and back to back for the second consecutive session we have seen a spike in the IVs. It has surpassed 14 levels, so that is again a cause of concern for the market. Across the board selling that we have seen today, I think there will be another leg on the lower side going forward.
When it comes to the sectoral move, IT showed some strength and now continue to be a laggard. Banking stocks also, we expected that Bank Nifty would probably outperform market, but today's trading session was tough for banking and IT stocks. Anything specific that you like in sectors or any trends that you are envisaging for the real estate sector or probably IT or banks?
So IT, I think it's merely a profit taking that we are witnessing. It has provided a good support to the market in the past, and now for the second straight session, we have witnessed some profit taking. Some amount of retracement is something that we are expecting in the Nifty IT index, which is currently trading at 45,350. It may test 45,000 levels going forward. But overall, I think whatever fall we see in Nifty IT, that could be a good opportunity to accumulate specifically large cap IT stocks like HCL Tech, TCS, and Infosys. So these are the few stocks can be added in a staggered manner. Apart from that, yes, we are still bullish on Nifty Realty. Back-to-back bullish candle can be seen for the third consecutive session. So Nifty Realty Index, we expect it to hit a new record high. From a short-term point of view, within this space, our preferred bet continues to remain Godrej Properties. This stock, it seems like it has formed a good bottom formation, and we are expecting this pullback to extend towards 3,100 to 3,200. Apart from that, Prestige State is another stock that is looking positive on the chart, can be added on declines for the upside target of 1950, and stop loss can be placed below 1800. And lastly, Oberoi Realty is another stock that has been one of the outperformer within the Nifty Realty pack, and today as well it has hit a new record high. So yes, this particular stock can also be added on declines, keeping a stop loss below 2180, and upside seems to be open for 2400 to 2500.
Right. Interesting, Yatin. Although the headline realty index was down, some of the stocks within the realty pack were still perched on solid ground. But one stock that stood out today was PPL Pharma. JM Financial has initiated coverage with a buy rating target price at 340, which implies a 35% or 30% kind of upside from yesterday's close price. Now, this is the highest target on the street, and just about taking you through what JM Financial has said. They're building in a 23% plus kind of an EBITDA CAGR, resulting in steady cash flow generation for the company. And if you look at the shares, they are trading at 21 times FY26 EV to EBITDA, and 17 times FY27 EV to EBITDA, and it's also available at a 38% discount to its other listed peers. Of course, there is the whole talk of Biosecure Act gaining
Correct.
approval, and once that happens, it will be a shot in the arm for domestic CDMO players, because of course the business will come, will get diverted from China to India. So that's something that could be the next trigger for the stock. But looking at the stock, Nilesh, the stock is already shot up 88% if you look at the YTD charts. Would you expect this strong up move to continue? Because today itself, at one point, it was up somewhere around 7% odd. Ended high by about 4%. How much of an upside do you see from current levels before calling it a top?
So the overall structure for PPL Pharma still looks strong. If you just pull up last 2-year chart, the stock has been in an uptrend, constantly forming a high top and high bottom formation on the weekly time frame chart. And if you see the key moving averages like 50-day moving average, that has provided a constant support for this particular stock. Recently, with this kind of momentum, we have seen the volumes have also picked up. So overall, the structure hints that the stock is heading towards 300 mark. That's almost its previous all-time high. It might be testing going forward. So at current level, the risk and reward looks favorable since we have seen the stock has cooled off from the highs. So one can keep a stop loss below 251. That's the 50 DMA support for this particular stock. And on the upside, immediate target comes around 280 and position target comes around 300 plus.
Okay, that is the talk on Piramal Pharma, and from Piramal Pharma moving to Quest Corp, which was one of the top gainers on Nifty 500 today, and now this staffing company is expected to do well with a 15% kind of a CAGR. Brokerages have been constructive on the stock. Now today we have an initiating coverage coming in from Antique Stock Broking. They have put a target price of 1,000 on the stock, implying a 50% upside from the current market price. Now, if you look at Quest Corp is almost the top 50 companies in terms of staffing and providing housekeeping services, and with the organized office space picking up, overall facility management services being quite a big business in the urban areas, companies like Quest Corp will benefit. In fact, Antique is expecting a 12 to 14% kind of a CAGR on the revenue side with a good margin expansion, and also with facility management and IT services, the overall margin picture should improve. So this is one stock which gained traction in trade today. In fact, intraday the stock saw almost a 10% bump up coming in. Any particular view on a company like Quest Corp or any mid caps that you like at this point in time?
So Quest Corp, specifically this particular stock structure looks strong, and it should be played purely from a trading point of view, because the major structure, if you just pull up previous 3-4 year chart, the stock is still consolidating and yet to surpass its previous swing high, which was seen in the year 2021 of 940. So that is still acting as a major resistance zone. But yes, from current level, we can expect this pullback to extend towards 750, 800 kind of levels on the upside. The stock has a very strong support of its 200-day moving average, which is placed at 660. So ideally 660 should be the stop loss for the long position. And looking at the today's volume spurt, it looks like we may see another leg on the upside towards 750 to 800.
Okay, expect another leg of upside on a Quest Corp. But the other stock that's on my radar today is Indigo, although it did end the day in the red. But Jefferies has reiterated its buy call on the stock. It has said that Indigo's pace of deliveries of new aircraft has picked up pace in the last few months, and it's a contrasting picture for Air India, where the pace of deliveries has slowed down. Now, JM Financial has I beg your pardon, Jefferies has pointed out that deliveries could slow down further and sharply for Air India in the coming year, and that will cap the overall supply growth for the sector itself. At the end of September quarter, if you look at Indigo, it had a 61% market share. And in October as well, I think it was somewhere around 63.3%, which was the highest for Indigo till date. It is India's largest airline. It had a fleet of 410 aircraft as of September, with 40 owned finance leased planes, 345 on operating lease, and 25 on damp lease. Going forward as well, two triggers mentioned by Jefferies for Indigo. It's normalization in the cost curve and scale up of the new digital initiatives that the company has taken, including cloud migration from traditional data centers, as well as AI adoption, etc. These are the key drivers. Of course, we know that it has introduced its business class as well, and it is aiming to become a global airline as well going forward. Jeffrey's target was in excess of 5,200, on the stock. But right now, at these levels, Indigo, the stock is down almost 11% in the last 3 months, but it has seen some bit of a recovery if you look at the monthly charts. Where do you see the stock heading from here?
So from the highs, after hitting highs about 5,000, the stock did witness some cool off, and this kind of retracements are basically giving good opportunity to accumulate the stock. On immediate basis, I do not see any trend reversal on immediate basis, but yes, it's good a level to accumulate this particular stock as a positional bet, because sooner or later, I think the stock is poised for a move towards 4,800 to 5,000. But purely from a December series point of view, I think the stock may consolidate in the range of 4,200 to 4,600. So that's the broader range from a December expiry point of view. But yes, it can be added at current level and on decline, keeping a stop loss below 4,200. On the upside, the target could be somewhere around 4,600. But it should be looked at from a positional point of view. I think it has a potential to move towards 5,000 kind of levels from a 2 to 3 months time frame.
Nilesh, what would you do with an Airtel? I think, on a YTD basis, it is among the top performers from the Nifty. But in the last few sessions, it has seen some bit of selling pressure. Is it a buy on dip opportunity?
Yes, absolutely. It's a perfect buy and dip structure we can see on the weekly time frame chart. No doubt, we have seen somewhat of consolidation in Bharti Airtel from past 2 to 3 months now. But looking at the development that we have seen recently, the stock has formed a good base formation in the zone of 1500 to 1600. So that's the kind of accumulation that we have seen in the past month. It looks good at current level as well. It can be added in a staggered manner. Positional target for Bharti Airtel comes around 1750 to 1800, and quite possible we might see those levels in the January series. But yes, good looks good to me to accumulate on declines as well. Keep a stop loss below 1500, and positionally the target comes around 1800 plus.
All right, that's the view on Bharti Airtel. But lastly, any stock that you would be or that you would like to recommend for viewers for the rest of the week?
Right. So within consumption space, United Spirit, Radico, in fact, these two stocks witness a good spurt today. Specifically, United Spirit is something that is looking attractive at current level. Today, if you see volume attraction in this particular counter, which is higher than the average volume, with a good build-up on the long side. So United Spirit looks positive for 1600 to 1630 kind of target, and a stop loss can be placed somewhere around 1530. So that's today's low. So 1530 should be the stop loss. 1600 and 1630 could be the upside target for this particular stock. Apart from that, Mazgaon Dock is a particular counter that is showing strength, and it has formed a big rounding bottom formation on the daily time frame chart. But it's advisable to buy on dips. So any dip towards 5250 to 5200, that can be a good entry point. Keep a stop loss below 5100, and on the upside target comes around 5500 to 5600.
All right, those are some of the recommendations coming in from Nilesh. But with that, Nilesh, would like to thank you for taking out time and joining in this afternoon and sharing your thoughts with us. Look forward to interacting again sometime soon.
Thank you, Nanita.
Well, then, on that note, Yatin, we've come to the end
Yeah,
of this edition of Closing Bell. Of course, wasn't a very good session today. It was a sea of red.
correct.
But tomorrow is the Fed meet outcome, right? We are expecting a 25 basis point rate cut. Perhaps post that we will get some bit of direction
Yeah.
in the market. Ahead of that, we have seen selling pressure. Let's see what happens today. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.